You're right, all. So I thought I'd just make this video on a gold CPR trade and really start off on kind of just understanding how this trade kind of plays out, in case you're not aware. And it might not have been one that you would have seen, at first sight, but once this unfolds, you'll start to see it. So what we have is really levels, right? It's a nice clear level. We've got resistance there, a bit of support there, and some support here as well, which is really nice for the trade. So there are three really types of traders. When you think about the type of strategies there are, it centers around really three, which is breakout traders, retracement traders, and level traders. You can add pretty much all indicators to a chart, but usually the foundation would be that they trade around support and resistance. So what you're looking for is when common technical analysis, right, from one of these three fails these traders. So what we had was, in this time, we had a nice level that looked like it was working. Anyone who got long here, right, looks like it's going higher, and then what it starts to do is starts to fail on these traders. But what we also have is the breakout trader, first of all, who trades breakouts of levels. Now this is an hourly chart, and breakout traders would usually look for a close below a key level. That close, you've all heard it on YouTube. Everybody says it. All the popular YouTubers say it. Once you get a close below, then that level has gone, which is not true. And so what's happened is that if you're a breakout trader, you're looking to trade this here, right? Getting short. Now, where you're placing your stop, who knows? Some have tight stops, but it's going to be somewhere around this region here, to varying degrees. And then you've got this wick that comes up and then comes down. So this is like a nice continuation type trade. On a lower time frame, maybe like the 15-minute, that probably would look like some sort of so it would look like a retracement trade. So retracement traders are getting in on this as well. It looks like it wants to go to the downside. Yep, it starts to go to the downside. So there are more traders getting involved here, and where they're placing their stop losses, the 15-minute traders are placing their stop losses here. Right, it's a typical trade. And what they don't know is what's coming to the right. They have no idea. So what I'm looking for and how CPR works is understanding where first typical traders get involved, retracement traders, breakout traders, and then understanding that these traders tend to not have that much discipline, and they suffer from something called loss aversion bias, which is losses feel worse than gains feel good. They tend to move and remove their stop losses, or not even use stop losses in a lot of cases, and so we can take advantage of the mistakes of those types of traders. So let's go back to like the 1 hour. And so nice clear level, and then we get retracement traders and breakout traders all within here, expecting price to do what? To pretty much go to the downside. That's what you go on 95, 96, 97% of trading, educating videos, and this is what they're teaching you. So then what happens is you get a failure. So the unexpected starts to happen. And as the unexpected starts to happen, certain fear and biases start to kick in. So they're seeing prices go against the trader. So what traders tend to do, and if you're watching this, you've done it yourself, is move and remove your stop loss. Thinking that you don't want to accept the loss. There are traders that take more risk than what they should have taken in that position. Maybe they're on a bit of a losing streak, and maybe they're at their wit's end, and they can't afford to take another loss, otherwise they're going to blow their account, etc., etc. Right? Many reasons. So these traders then, the not disciplined ones will end up moving and removing their stop losses as price starts to go against them. get a little bit of a relief here potentially, and they think, oh, okay, phew, you know, prices are starting to come back. All right, brilliant. But what eventually starts to happen is prices go against them. Yeah, prices start to go against them, and the traders, you know, that ended up getting involved around here to the short side, again, thinking that prices were going to go to the downside. There would have been traders that may have decided to buy here, but if you look at the overall recent trend, most traders are going to be looking for trades to the short side. There would have been some traders getting involved here, but with this quite bearish price action, yeah, with that bearish price action, again, if you go down to maybe something like a lower time frame, like the 30-minute, etc. Let's take this off for a little bit. You know, that could have been just like a deeper pullback. So a lot of traders would have been like taking that to there. Maybe that was some sort of 61.8% fib. Yep, so price didn't close below, so it was just a spike up. Nice confluence at that level. That's just another level for traders to get involved in. And look at that. Look at the confluence there. So you've got nice support and resistance confluence for traders to get short again. So you've got resistance here, you've got support, resistance, you turn resistance. So more traders are getting involved to the downside, nice engulfing candle, etc. Yeah, so nice 61.8% confluence. And again, not knowing what was coming to the right hand side of the screen, there's not too many traders that would be buying right here. Yeah, considering the recent downtrend. Again, as we know, what happens is if we just go forward a little bit, let's go maybe back to the hourly, and let's go forward a little bit, prices start to go against them. And as prices start to go against them, again, these traders, new traders and old traders that are still in this trade who can't accept a loss because of loss aversion, are moving and removing their stop losses. So what ends up happening is that they're captured in their position, right? They're captured here. This is the pain phase, and the further price goes away is the more they start to look at their profit and loss, unrealized profit and loss, and they pray that if prices come down here, if they could only just get out for a break-even trade, which is the next best trade, after a losing trade or a small loss, that they will. Now, what does this have to do with supply and demand? Because if you look at the supply and demand equation in this area from a technical analysis perspective, what you've got is anyone who went short here in this area here, let me clear the chart. Anyone who went short in this area, in and around this area here, and here, if they went short in order to exit their trade at break even, so they had to sell to go short, they need to do what? Buy to exit. Traders who are trading levels, support, resistance. New traders are going to be looking at a level to do what? Buy. And also traders, if price does come down here, who are trading the level from potentially up here, resistance. If this comes down to a level, this is where potentially they're going to take profit, and if they sold up here, then they need to buy to exit in the same way that these guys need to buy to exit here. So these guys are caught, capture, pain, and then the relief, yeah, which adds to the supply and demand equation in and around this level. Now, none of us know to what extent when prices exactly will turn, but what we do know is that from a technical analysis perspective, there should be more demand in this area, than supply. Because again, who trades at, who's buying at lows? Well, who's selling into a low? It's not really what traders tend to do. Now, gold obviously is a safe haven asset. Potentially, you want to be long gold. So this looks like in this area, this whole area here, and the lower, I think the lower the area for me, this area here, if price does come down into that zone there, that box, then that is a really decent trade to the upside. As I think that there will be more demand than supply there. It's a risk sentiment, driven asset. So if risk does come more back on, then you should get prices come down to here. But if risk is off potentially and still, then you may get prices reverse at that area there as well. But in a risk on environment, gold doesn't do well, so that level may not work. Again, it's just 50-50. It's the flip of a coin, but this is how we look at technical analysis, is understanding, deeper understanding of trading against traders, and understanding why there should be more supply than demand, more buy orders than sell orders. Buy orders than sell orders down here. It's the reasons why we should get long at levels. So if you want to learn more about capture pain relief, and the various different ways and different setups and patterns that we look for, you can join Trading 180. Go to the Trading 180 website, have a free course, and you can sign up there and have a free look at what exactly we do in the Discord group and in the course. All right, guys, take care and speak to you soon. So if what I'm saying resonates with you, why not check out trading180.com? There is a selection process to trade my supply and demand zone Forex strategy. I'm only looking to work with individuals with the right mindset, who are hard working as well. So check that out. And access really for less than £1 a day. Some of the strategies in here are not for beginners. So if you don't know what supply and demand is, please check out all of my supply and demand videos. I have hundreds of videos on YouTube, so you can check that out first. Guys, take care, and until the next video, have a good one.